Good morning, I'm Peter Milios from the Finance News Network. Stocks fell Monday as recession fears mounted and investors worried time is running out for a year-end rally. The Federal Reserve, European Central Bank and the Bank of England each pushed interest rates higher by 0.5% last week, a step down in the previous pace of increases. However, they stood firm on their plans to continue their attempts to slow rising prices, with the ECB saying inflation remains far too high. Their warnings that further interest rate rises are needed to bring record inflation under control sent global stock markets lower last week. Investors will also be watching for a few earnings reports due later in the week. FedEx and Nike are both scheduled to report earnings results on Tuesday after the markets close. As recession fears mount, earnings results will become more of a focus. The Dow Jones Industrial Average shed 0.49%, the S&P 500 fell 0.9%, and the Nasdaq Composite shed 1.49%, weighed down by shares of Amazon, which slipped 3.35%. Stocks are set to round out a dismal monthly performance in December after 2 consecutive negative weeks. So far, the Dow is set to end the month more than 3% lower, and the S&P 500 is down nearly 4.5% in the same time frame. The Nasdaq Composite is on track to decline 5.4% this month. And it wouldn't be a morning note without further Elon Musk commentary, as Twitter users have voted for Elon Musk to step down as the social network's chief executive, adding to turmoil over the future of the San Francisco-based company. The billionaire entrepreneur who bought Twitter for $44 billion in October launched a poll via the platform on Sunday asking whether he should remain at the helm, adding, "I will abide by the results of this poll." As owner, Musk remains on the hook for $1 billion in annual interest payments after loading the company with $13 billion of debt to help fund his acquisition of the business. And the SEC has cracked down on financial influencers who have been accused of running a pump-and-dump scheme. The defendants used social media to amass a large following of novice investors and then took advantage of their followers by repeatedly feeding them a steady diet of misinformation. The conspirators used podcasts and social media to talk up stock prices to their large followings, then sold their shares, according to court filings by the SEC and the Justice Department. Across the sectors, energy was the only outperformer, with new energy thematics like hydrogen, EV chargers and solid-state battery stocks the worst performance. The SPY futures are pointing to a 0.4% fall. Thank you for listening.